Hi, everybody, and welcome to the IC Markets Market Commentary. My name is Adam Harris from Trade with Precision, and today I want to do a spotlight on several charts for you. So the very first thing I want to do here is take a look at the current global indices, starting off here with the FTSE in the UK, and just highlighting we've had a really nice bullish candle last month in July. We've broken the high. The implication is the momentum is to the upside here, and so just eyeing out where we've had some sort of depletion or exhaustion in recent years, I do expect the market to attempt to work its way back up to this major level, which could provide some short-term buying opportunities for day traders. Actually, looking through at the US at the S&P 500 as well, we have a beautiful bullish inside candle. We've broken the high of that as well. Historically, after a correction like this, we would see a move to the upside here. So the initial expectation is to see this starting to at least attempt to push higher. The question is really how high will it be able to get? But certainly once it breaks these previous highs on the weekly chart, then my optimism for it starting to shift from a downtrend into a new trend, but certainly not a downtrend anymore, is quite significant. This area, therefore, is something to watch because this area could still act as resistance if we could see the market head down from here. However, I do think that if we have a solid close above that, which could be this week or next week, we could see a continuation to the upside. Then moving on to the euro dollar. So this is an interesting formation, and it is still very much early days. You can see in the past here when we've tried on the daily here to head up above, say, 1.02, encountered a lot of resistance that we managed to break through that, then got knocked back down. We're back up again, knocked back down, but the market keeps pushing back up to that level. Basically, the fact is the market does want to break out, but I think that I would include this area here, price area here, as a battle zone, and therefore I would only think that once we break up and close outside of that, effectively outside of this box, that the likelihood of us continuing up to, say, 1.04, possibly as high as 1.06, is on the table. I just wanted to highlight we do have a series of higher lows here. You can see the market is pushing the upside or testing the upside a lot more than everything else or anything else, and therefore that is a possibility. However, looking at it from a weekly perspective, we are still within a weekly retracement back up into these previous lows, which is why 1.0350, 0375 is definitely a valid correction to the upside before the market might want to continue its downtrend, resume that downtrend and do another leg down towards parity. Historically, we tend to, most of the time, to ultimately go through parity. The very fact that we're close to parity is in itself a signal that potentially that's where the market really wants to be. We shouldn't have got this close unless this is something the market's thinking about. But at the same time, we're also due for a decent correction. We've had a year-long move to the downside. The monthly is very overextended and therefore moved back up into this area. It does make sense. And possibly that is all the market is looking to do. Break out of this, head back up into this area, and then potentially resume. We'll have to see how that goes. I want to move across and just talk about cable as well. So GBP on the daily here, this is actually a 4-hourly. I just wanted to highlight that it is currently range bound between these two levels. And therefore what I'm looking for is a break above that to the upside, would then signal a move back up to these old highs, or if a break below that would signal a move down to these lows here. And that is initially tied with whatever's going on with euro dollar, and so we'll have to see how that ultimately goes. Then moving on to trade ideas, these are the ones I really like. Euro CAD has got some very nice bullish divergence, rejection of these lows, overextended to the downside. Same thing here, it's struggling with this area, but it just keeps pushing up. We've got a series of higher lows pushing up into this level. I do believe that there is a high probability that there'll be a breakout at some point from this level, and that the immediate next target for it will be around about 133, call it 95, just below the 13400 level. My stop loss, potentially one of the ideas I may have, is to provide it under the most recent visually obvious swing low. Possibly there's a tighter entry on a lower time frame, maybe up here as well. That's also a possibility. I quite like that. That changes the reward to risk on the setup. But again, there's always risk with every trade idea. Certainly looking to take some profit at 1-to-1 and make sure that my position is nice and safe when we arrive at these lows. The probabilities of it breaking through and continuing up to the next level is possibly 50-50. There is a possibility it can happen, and I want to be prepared, but making sure that managing my expectations, that I've secured profits and protected my trade position by the time I arrive at this level. I should already have banked some profit. KiwiCAD as well is producing a very, very nice bullish move up. If we look at it from a weekly perspective, it is similar to that downtrend. It's coming back into these old lows. And so, yes, this is an area where we could potentially turn around and resume the downtrend. But right now, this is looking very, very bullish. And therefore, I would say a break and a close above these most recent highs would, for me, be a signal that the market is potentially intent on heading higher. And this could provide multiple entry opportunities on the 4-hour time frame, where, for example, price breaks out, might come back and retest this before continuing up to the next level, could provide again a 3 to 1 or 4 to 1 or 5 to 1 potential trade idea. So I quite like that. And finishing here on gold. Gold, again, very similar. We've seen a lot of this. It's very much dollar driven. And we can see here we are within a weekly downtrend. We have come back into a previous level of support. And this is an area where we could find resistance. And by the end of the week, if we have a strong bearish rejection candle there, that is then an indication the market is now potentially considering heading back down towards these lows. However, one of the things I do want to mention here is that should price again break above this, I would indicate it's a little bit above the 50-period moving average, which is a slightly more bullish tilt than I would have expected. I was expecting to see more resistance there. We've broken through that. And again, I would say if we start to break up above this, come back to retest it, there could be some really good potential trading opportunities. Just mentioning sort of sluggish momentum on these indicators, that implies that the market is the bulls have definitely started to extricate themselves from their positions because they're anticipating the reality of a move to the downside. I would say if we start to break below these lows here, just marking that, then I would say the implication is the market's going to hit low. It's going to finish off the week bearishly. However, I would say at the same time, should we manage to recover from where we are here and break out, we might see a continuation back up towards sort of $18.79, I would say $18.99, $1900, and therefore that could be a good opportunity to the upside. But here it's starting to wane a little bit, so there is a possibility we could get a bit of an inverted head and shoulders. That's why I really want to see the market break up above these highs. And I also want to see, if that is the case, then I want to see the MACD climbing and the RSI climbing as well. And that is it from me. Thank you very much for your time this week. I appreciate it. I look forward to seeing you in future videos and webinars. Thank you very much.
Thank you.